Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 414 on February the 13th, 2026. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Opendoor Technologies, Ocular Therapeutix Inc, Ford Motor Company, and Bank of America, and we discuss 4 new trades on Cipher Mining, Core Scientific Inc, Carnival Cruise Lines, and NuScale Power Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the market's headed lower week over week. The Dow Jones Industrial Average lost 614 points, closing the week at 49,500 points. The S&P 500 index lost 96 points, ending the week at 6,836 points. And now it's time for the topic of the week. The topic of the week is personal history. Last week, I discussed the importance of understanding how a stock price has performed in the past, knowing its history. Today, I want to make it more personal and go a little deeper. For those of us who have been trading for a little while, it's important to know the pluses and minuses of your strategy based on your personality, right? You might find that every time you see an opportunity in a particular company, that trade goes against you. That's good information to know. That information tells you as much about the company itself as it does about your own ability to interpret their stock price accurately. So, you use your own analysis that has been incorrect in the past in order to help when making future decisions. I've been using trading journals that show me where I have lost money consistently on particular strategies with specific companies. That's great to know once again. So when the numbers appear to align with that company, I know to go the other direction. Just the same, there are some companies that I have a high winning percentage whenever the economics of a trade fit when I'm looking for. And so that gives me the confidence to double down or execute the trade quickly. So as a piece of advice, keep a trading journal. That will help you analyze not only the stock price, but how your trading of that specific stock price has worked in the past. You can turn a track record of losses into a track record of wins simply by using the data from the past, from your past. So that's it for the topic of the week. Let's go ahead and jump into the review of last week's trades. And right off the bat, I've got to admit something. So last week, the covered call, all of the numbers did not match the company. I don't know if you guys caught that, but I don't know if it was the higher altitude and the lower oxygen rate because I went skiing last weekend in Colorado, or maybe it was what some of my housemates were doing outside that I could smell upstairs. No, I'm kidding. I actually am kidding there. But hey, quick shout out to Paul if you're listening. Just seeing if you're around. I enjoyed hanging out with you last weekend. But just to get back to this review, I said Clean Spark Energy, and the truth of it is it was Opendoor Technologies that I had on. And I had just made a note about Clean Spark, but screwed that up. So the cover call, the numbers were actually on Opendoor Technologies, symbol O as in Oscar, P as in Papa, E as in Echo, N as in November. At the time, the stock was trading for $4.89 per share. I looked at buying stock and selling the February 5 call at 38 cents. That would give me a return of 10.02% in 2 weeks. Well, shares of Opendoor Technologies fell 45 cents, ending the week at $4.44 per share. The call option that we sold lost 21 cents, leaving us with a net loss of 24 cents if we were to close the trade out immediately. Now, the share price is slightly below the break-even price, so you could justify making an adjustment. The main one I would consider is rolling the strike down to the $4.50 strike, which would allow you to collect 31 cents and erase the loss on the week. Now, if you'd like to get back profitable immediately and possibly get taken out of the shares of stock, that's the route I would go. The other option is to wait and let that $5 strike expire out of the money in a week at expiration, right? If the stock price goes higher, then you keep all of the original economics of the trade. If it does expire out of the money, meaning that $5 strike expires out of the money, the stock expires less than $5 per share, you would not only keep the premium of the call that we collected when we first sold it, but you would turn around and sell another call option in the month of March that will once again wipe out your loss on the week and increase the overall profitability on the entire trade, as long as the stock doesn't go lower than the two option premiums combined. So I like the latter option. So personally, I would look to hold through expiration without making any adjustment. Next up, we have the cash secured put on Ocular Therapeutix Inc. Symbol O as in Oscar, C as in Charlie, U as in uniform, L as in Lima. At the time, the stock was trading for $9.17 per share. I looked at selling the February 9 put at $1.15, hoping for a return of 12.78% in 2 weeks. Well, shares of Ocular Therapeutix lost 29 cents, ending the week at $8.88 per share. The put that we sold lost 20 cents on the week as of the close of business on Friday. So that's the initial story. The rest of the story is that the stock price is up over $2 in after hours trading, leaving us with no reason to make any sort of adjustment for Monday at this point, or actually it would be Tuesday. This trade appears to be working out as planned because of the after hours activity. I'm not looking to make any adjustments on this, and I'm fully hoping to keep the full premium I collected at the start of the trade when this stock expires on Friday. When the stock doesn't expire, it's when the option expires on Friday. Next, we have the credit spread on Ford Motor Company, symbol F as in Foxtrot. At the time, the stock was trading for $13.80 per share. I looked at selling the February 13 put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Well, shares of Ford Motor Company grew 30 cents, ending the week at $14.10 per share. The out-of-the-money put spread that we sold is still out of the money, and with 5 days until expiration, it looks like this spread's going to expire out of the money. Now, you can also buy the spread back for 3 cents, allowing you to lock in 13 cents of profit immediately. While I like squeezing all of the juice out of a trade, sometimes it's great to just close early and walk away. You'll never go broke taking a profit. However, you also will limit your return potential by taking a profit too early. So either way, this trade worked out as planned so far. It's just a matter of what you want to do over the next 5 days. And our final trade from last week was a debit spread on Bank of America, symbol B as in Bravo, A as in Alpha, C as in Charlie. At the time, the stock was trading for $56.54 per share. I looked at buying the February 56 half call spread for 34 cents. That could give us a maximum gain of 16 cents, or that's a 47% return in 2 weeks. Well, shares of Bank of America fell $4.02, ending the week at $52.52 per share. The in-the-money call option that we bought is now out of the money. We are $3.82 beneath the break-even point, giving us every reason to make an adjustment on this trade. However, the prices on the spread, if we turn the spread into a credit spread, are not super appealing at all. To recoup our money, we would need to widen the credit spread out and sell an equally wide out-of-the-money put spread against it. The risk would multiply in the process, so it's just not worth it. Ultimately, it's not worth it at all. So if the stock can fall $4 in a week, maybe it'll bounce just as much in the next week. I'm not going to multiply a loss by trying to recoup a small loss on the week. And normally this stock doesn't drop $4 like this. So this was a pretty aggressive week. I'm going to hold this until expiration and just see how the cards play out in the next 5 business days. But really it's 4 business days. But sometimes you just have to take the loss, and that's the danger of these 2-week spreads, right? So that's it for the week. We are, of course, 1 week away from February options expiration on Friday, February the 20th. All new trades on today's show will use the March 20th expiration for monthly options in March. The U.S. markets will also be closed on Monday, February the 16th, in observance of President's Day, making this upcoming week a shortened trade week. So a couple times I had to catch myself when I said 5 business days. Really, there are only 4 business days this next week where the market will be open. So, all right, with that being said, let's go ahead and get into the review, or actually the new trades for this upcoming week. We're going to start off with the covered call on Cipher Mining Inc. Symbol C as in Charlie, I as in India, F as in Foxtrot, R as in Romeo. The stock ended the week at $16.41 per share. I'm looking at buying that stock and selling the March 17 call at $2.11, hoping for a return of 16.45% in 5 weeks. Then you enter this trade by buying stock for $16.41 and concurrently selling the March 17 call at $2.11. This trade makes the most money if stock prices finish above $17 per share. The break-even price is $14.30 per share. In real terms, the stock purchase will require $1,641, and you'll collect $211 for selling the option. Next up, we have our cash secured put on Core Scientific Inc. Symbol C as in Charlie, O as in Oscar, R as in Romeo, Z as in Zulu. The stock ended the week at $17.82 per share. I'm looking at selling the March 17 put at $1.86, hoping for a return of 10.94% in 5 weeks, almost 11%. Now you enter this trade by selling the March 17 put at $1.86. This trade makes the most money if stock prices finish above $17 per share. The break-even price is $15.14 per share. In real terms, you'll collect $186 for selling the option, and you will have $1,700 locked up just in case you need to purchase the stock. Next, we have a credit spread on Carnival Cruise Lines. Symbol C as in Charlie, C as in Charlie, L as in Lima. The stock ended the week at $31.76 per share. I'm looking at selling the March 31/30 put spread at 33 cents. That could give us a maximum possible loss of 67 cents per spread. Now you enter this trade by selling the March 31 put at $1.51 and concurrently buying the March 30 put for $1.18. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $31 per share. The break-even price on this trade is $30.67 per share. In real terms, you'll receive $33 per spread that you sell and have $67 at risk. And our final trade on the week is going to be a debit spread on NuScale Power Corporation. Symbol S as in Sierra, M as in Mike, R as in Romeo. The stock ended the week at $14.30 per share. I'm looking at buying the March 13/14 call spread for 61 cents. That could give us a maximum gain of 39 cents, or that's a 63.93% return in 5 weeks. Now you enter this trade by buying the March 13 call for $2.83 and concurrently selling the March 14 call at $2.22. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $14 per share. The break-even price on this trade is $13.61 per share. In real terms, you'll pay $61 to enter the spread, and your maximum gain is $39 per spread. So that's it for this week's show. Thank you guys so much for listening. Thank you for following along. Thank you to those of you who pointed out that I had mentioned the wrong stock symbol on the covered call last week. I couldn't. So if I post a new show, it just creates more confusion because you'll have 2 episodes with the same number. You can't just replace them as easily. That's the beauty of making this podcast, is that you guys know I don't go back and fix my errors. There's no going back and redoing this. It's almost like, well, it's not almost like anything. The show is time-stamped and marked each and every week. So if suddenly I go back and re-record episode 413, it doesn't put it in the order of the episodes. It puts it in the order that it was recorded and posted. So there's a certain element to this that keeps me honest. And I've gotten messages from many of you. You guys get that, and that's what you love about the show. I admit when I lose money, like 2 of my trades earlier today, 2 of my review from the last week, lost money. I love to make it where every time, every show, it's always winning, it's always making money. But that would be a disservice to you guys as well, because you tend to learn the most when you hear how someone thinks about adjusting or maneuvering around a trade. The initial trade's just sort of the first negotiation. Sometimes it takes a little bit more than that to squeeze out a profit. So anyway, I hope you guys have a wonderful week. If you're doing something fun, enjoy your President's Day weekend here in the U.S. And thanks again for listening. As always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.